Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with you all this very special Focus Friday we have, folks. Seth Udinsky, Sam Case, and your host, Mark Manila. Mark, I'm excited for the show today, brother.
I am too. I'm very excited about it because this is Focus Friday and we have overtime today. We're actually, I don't know if everybody knows this, but this is our 1 week anniversary for Financial Issues.
Yeah, we're expecting cards in the mail wishing us a happy anniversary.
Right. You know, guys, one of my favorite theologians in history, John Calvin, spoke of the double gift that the believer sees, justification and sanctification. Well, we're presenting you all a double gift today of Focus Friday and Financial Issues overtime. Pretty cool.
What could be better than that?
That's right.
You know, only thing that make it better is if we could have some snow.
Absolutely. Well, I think we're going to get that too later on.
Hey, guess what? You're in luck, Mark.
Yeah, right. That's awesome.
Oh, no, my brother thinks the whole forecast is a scam, so we'll see. I saw a great weather report that said this weekend 1 to 76 inches, maybe. I don't know. We'll see.
You know, I wonder if that's how they keep us glued to those channels, is if they be vague about it. You know,
I mean, I'm hooked.
Yeah.
You know, I can't. The only thing being more lonelier than being an economist would be to be a weatherman.
Yeah, seriously. Absolutely.
There was a book on statistics and probability and all this kind of stuff. Can't remember what it was, but I went through it. And it talked about that weather prediction is less than 20% accurate.
I believe it, Mark. Yeah,
anyway.
Absolutely. It's humans trying to figure out things that really God is in.
You can just say 20% of the time we're right 100% of the time.
Exactly.
That's how you get away with that.
Exactly right. That's good.
We're right 100% of the time, 20% of the time.
That's right. Yeah, I like that version better.
I love it. Well, guys, listen, we have a packed show today. It's going to be a lot of fun. Folks, call in right now, 610-363-1110. Again, the number is 610-363-1110. If you're hunkered down, ready for the snowstorm, join us today. We'll talk, if we have time, we'll talk about the battle for Y'all Street heating up. The president's going to be weighing in on it. Also, of course, overtime, as Mark and I mentioned earlier. Hang with us. Remember, the end of our hour, Financial Issues, does not end as you join us for overtime, but you have to get to financialissues.org/watch in order to catch it exclusively on financialissues.org/watch, as well as our FISM app. So make sure to join us there at the bottom, or at the top of the hour. The end of the live show turns into overtime. It's going to be fun. But first and foremost, guys, looks like the U.S. economy grew at its fastest pace in 2 years in the third quarter of last year. Sam, give us the details here. What's going on?
Yeah, and that's according to updated Bureau of Economic Analysis data. As you said, fastest growth rate in 2 years, according to the third quarter GDP. That's July, August, and September, showing the economy grew at an annualized rate of 4.4%. The BEA said, quote, compared to the second quarter, the acceleration in real GDP in the third quarter reflected upturns in investment, exports, and government spending, as well as an acceleration in consumer spending as well. That report said altogether, taking in the first, second, and third quarters, the economy grew at a 2.5 annualized rate through the first 3 quarters, as I said, of 2025.
What does this mean, Mark? Is this Trumponomics in all its glory? What's going on here?
Well, I don't know. This catches me by surprise. I never heard any of these numbers. No, I'm just kidding.
What's a percentage?
What's a percentage? No, yeah, it's what all last year we talked about this. We're seeing real world things happening. It's not just government writing checks, holding everything up or doing it. It's private markets coming into play. It's like you said, it's exports, it's spending, it's real growth. And that's so important. A strong GDP increases revenues. And that's really important because you know how I feel about debt. If we want to get out of debt, we need to grow. It helps to have a strong economy, a growing economy, because that creates more revenues, and more revenues helps us either pay down the debt if we have good people in office or expand our debt if we don't.
Unfortunately, the tendency, Mark, is, look, the economy is doing well. That means we can spend more.
Yeah, exactly. But I don't see that in this administration. I really don't. I know there's been a lot of somebody's out there listening saying, "Oh my gosh, Mark, you're being so one-sided." No, I'm not. Here's the deal. Whenever you go to fix something, for example, if you want to fix your house, if you want your house to be redone, it costs a lot of money up front to get that done, and then you start realizing the efficiencies of the new windows and all the things, maybe the solar that you put on the roof and stuff. It doesn't happen at first. There's a J curve to that, and that's what's happened here with the spending. I believe with the spending of this administration, even as they pulled down and recovered a lot of things from fraud and just money pouring out of the coffers here. Even as they pulled that in, even with the tariffs, all that, we can't do it if we don't have the revenues and a strong economy going on. So, growth alone isn't enough to get the spending down. I know we don't want to go into a rant about debt again because it's way too often I go into it. But I think it's great. I think it's wonderful. And I think we all saw this coming. Bottom line.
Mark, I'm going to have to ask for your forgiveness here because I may be leading you into a rant about debt with this next question.
Okay.
But, I'm with you. I love a strong GDP. But like you said, there's still the issue of spending. There's still the issue of the $39 trillion of national debt that we're in. So how much does a strong GDP really matter if there's still that huge elephant in the room, that thing looming over us that has to be addressed at some point?
Well, remember, GDP, that is production of what's going on. That's before spending, individual spends and all that kind of stuff. So that leads into maybe higher wages. It leads into more taxes across the board, because if the economy is growing, that means revenues are growing, not only for individuals or corporations or stuff, but for taxes and for generating revenues for the government. So those revenues from the government help offset the deficit spending. If we offset the deficit spending and we start paying down the debt from other means and or those means as well, we can start bringing down debt. It's really simpler than most economists makes it. Just think about it in yourself. If you had a small business, I don't know, maybe making swag for financial issues, something like that. And
I hear people
That'd be a
want
good
that,
job.
Mark. Well, actually, you know what? I'm not actually sure if they do. Folks in the chat, the rumor on the street is nobody cares about swag, so feel free to correct me there, or you can call in as well.
So let's say you had a small business, but it's you started gearing up because there's so much interest in it. Well, you don't see those profits yet, but eventually they lead to more earnings, and more earnings are more revenues, and more revenues, hopefully more profits. More profits means more taxes. More taxes mean the government can use that to get out of debt or to reduce the deficit spending so that we can start bringing down the debt. Now, there's other things that have to happen here as well. Like I said, we need to get the interest rates down. Real interest rates need to come down so the cost of our debt goes down, and we can spend less on that and more on paying principal. Then we need to have other things going on, such as reducing the deficit spending. How about just curbing the fraud? Like Trump said, 50% reduction and 50% of the fraud, we probably could reduce our deficit spending down to zero, because I don't know what article I read, but they said if we could just stop the fraud and abuse in what's going on in D.C. or in the Treasury, we would actually have a surplus every year.
I remember Trump said yesterday at Davos, he was talking about fraud, and he said, if we could cut maybe even half of the current fraud going on, we'd have a balanced budget.
There you go.
Good stuff, guys. Hey, 610-363-1110, folks. That's the number to call in. Again, the number 610-363-1110. Mendo, we see you in the call queue. We'll save you for the other side of this break.
Yeah, because we only have a minute and 35 seconds left, so we don't want to just jump in. So, Minda, thank you for waiting on that. And we do appreciate everybody getting in the queue as quickly as possible on Friday, because we really this is our Focus Friday. We want to focus on our partners and your questions and your comments. So join us on the show here today, and then join us on the overtime. We have a half an hour overtime at the end of this show. And I did want to bring up in the last minute we have here, we have an announcement coming Monday of the expansion of our distribution, which is going to be very exciting. And I think all our partners and all our friends in the chat room are going to be excited about that. Don't you, Seth?
Yeah, I think so, Mark. Really exciting stuff. So we'll be going actually back on the Dove. So it's TV and radio. Great.
You just gave it all away.
Oh, I'm sorry. Was that
What's even the point anymore, Seth?
Yeah, so much for surprises.
I wasn't sure if I was supposed to surprise him. Well, we did the surprise last Friday, and I figured, might as well have another surprise. But I just wanted to spoil it.
Yeah. Now we know we can't tell Seth's secrets, or they just get out there. But here, this is a secret between me and you listeners here right now. Don't tell Seth, but we will be right back after this very short commercial break, and we want to hear from you.
There are read carefully before investing.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Hey folks, today's show is brought in part by our friends at Crossroads Kids Club. We love all of our sponsors, and we especially love Crossroads Kids Club. Mark, they do just amazing work bringing the gospel to children in public schools. Love to hear the work that they do, and they're growing as we are as well. It's wonderful to be partnered with them again. So you can check them out at reachOurSchools.com. It'd be a great place for you to go. Mark, why don't we go to the phone, shall we?
Let's do that. Hey, Minda, welcome to Financial Issues. What's on your mind this morning?
Good morning. It's not a question, but a small story that I hope will encourage other FISM partners. So yesterday I was in a very large community credit union. It's the largest in Atlanta, very huge. And there was this young gentleman who waited on me, teller, who's in school for finance and college for finance. So I said, I need to tell you about FISM. So I told him about the ministry, and then I left. And then I thought, oh, darn, I didn't tell him about the app because he can listen in. He can become a partner, and I told him how to do that. But, gosh, he can listen on the app, and then that'll encourage him. So I left there, and I drove a couple of exits down, and I couldn't go back, so I called the main office of this community credit union, huge, and said, can you get me to the branch in Woodstock? Because I really need to talk to this gentleman. And so I had to give him all my credentials, my social, the whole deal with the bank. And so I finally got to this guy, and I know he thought, what in the world? I said, I've never done this, but I really wanted to tell you about the FISM app, because you can listen on there every day from 9 to 10. If you miss it, you can listen again at 10, and you will gain so much information, great financial information, because he wants to be a financial advisor. So great. I just loved it. I loved it. I could connect, with the ministry. And anyway, I just had to share that story.
Well, we are so grateful for you doing that. Imagine if every one of us would, anytime we have the opportunity, share financial issues with someone. It just doesn't mean an expansion of the ministry, but Minda, what that would mean is we'd be touching people's hearts for Christ. We'd be helping them grow closer to their Savior through their finances. We'd be helping those who don't know Christ actually come to Christ, or helping them on their journey to receive Jesus Christ as their Savior. It's more than just expanding the ministry. It's impacting the world for the kingdom of Christ.
Yes, and I don't know if he's a believer, but he's going to hear the word if he tunes in. So, yes.
That's right. Amen to that. Well, thank you so much. You are a blessing to us. God bless you.
And you as well.
Stay warm this weekend.
Right. I think it's overblown, but we'll see. I'm in the mountains. So. I have a very steep driveway, which I will not be able to get out if it snows or ices. So. Okay,
and I count that all joy. Yeah, I have about 1.5 mile road. It's a dirt road that leads to my house, and if it snows or ice, I can't get out of it. And those days I just look up to heaven and I said, "Thank you, Lord. I don't have to go anywhere now." Praise God. Yeah. Thank you.
Read the word.
Amen. Right. God bless.
Thanks.
Have a great weekend. Bye-bye.
So cool. Mark, in the history of our ministry, I can remember, we've placed a special emphasis on the way that we grow. It's not the only way, but one of the key ways that we grow is natural organic growth, meaning the people who know about FISM just tell other people. That's exactly what Menda did. That was so cool. And I hope all our listeners can take a lesson from that and maybe take the step. I get it. It could be a little uncomfortable. You tell someone about something that you really care about and you're not sure if they'll care about it as much, especially a stranger like this bank teller here. Menda just went for it. It was so cool. Really, really a cool story.
Yeah. Hey, Seth.
Yeah, Mark.
Do you think it'd be okay if we sent her a book?
I think that'd be a great idea. Absolutely.
And just thank her for her loyalty and love for the Lord. And
are you talking about this book, The Wall Street Awakening, which everyone should get their hands on?
That's a good one, especially for somebody who wants to invest with biblical integrity.
Yeah, absolutely. Folks, if you want a copy of The Wall Street Awakening, just make a donation to the ministry of any amount. Send us a note. Tell us you want a copy. And Menda, we'll get your information and we will send you a copy of The Wall Street Awakening. That's so cool. Good stuff, Mark. Folks, the markets yesterday had a second day in a row of running up. They were feeling pretty good. Thursday's closing bell saw the Dow Jones up about 0.2%. S&P 500 was up about 0.5%. NASDAQ almost a full percent. The Russell 2000 about 0.75% there in the positive.
So, does that mean, Seth, that 2 days ago, 2.5 days ago, 3 days ago, that was a knee-jerk reaction to the markets and the pullback?
I guess it could have been.
That's so unusual.
Don't be silly, Mark. Don't be filling our heads with nonsense.
Would they? They're reasonable and understanding. Yeah, no, exactly right, Mark. Hey, Mark, here's a real interesting question from Pete. Pete's a longtime listener from Seattle, and he says, "Hey, Mark, please elaborate on why you dislike Motley Fool." So he says, causes a concern when we get solid advice through FISM. Motley Fool keeps trying to get the buy-ons and special insight, all that. But Pete says, I found their basic service useful to monitor trends, developments, new opportunities. He said, I never buy based on Motley Fool recommendation unless it's biblically responsible, and rarely, if ever, if it's not an FISM buy as well. But I've used Motley Fool to help decide between two FISM sector buys. And so he says, here's an example of something I picked up in part through them that I would keep an eye out on for the FISM show. Apparently, there's a shortage shortage of pure high silica sand, which is critical to certain key industries, and apparently something is going on in Texas in this regard. So all that to say, Mark, what are your thoughts for Pete there and this indictment on why you hate Motley Fool? No, I'm just kidding. What would you have for Pete?
You know, I have a long history with Motley Fool. The brothers, when in the earlier days, I had them on my radio show a couple of times. Here's my issue. It's not with Motley Fool tools or even some of the information you can get there. It's how they get you to get there. I never want to start a relationship with somebody by them holding back information or exaggerating things. And you know, if you ever click on one of their ads, it's, you know, this new company is going to be better than NVIDIA. It is said it's going to make NVIDIA look small, and you need to get in before. And then, you know, it goes through all, but you always have to go through this. I call it clickbait. Maybe it's not the same thing, but the clickbait until eventually you pay them to get in to find out it's a company you already knew about, and that is common information. So I just don't like the idea.
Or something like that. Yeah.
Yeah. I don't like the idea of beginning a relationship with investors through hype, urgency, and selective disclosure to make it sound like they have something nobody else knows, you know. That's the issue. So I have that problem with starting a relationship. They're exceptionally slick salespeople. I guess that's what it's coming to. You know, they frame ideas that as if they hold a secret no one else knows, and for a fee they'll let you in on the name of the next stock that was supposedly surpassed all others. And generally, it's just normal information you could have found out on any other site or anywhere for free. So that bothers me because it makes me feel like somebody is snowing me, taking advantage of me, and I don't like that to happen. I mean, there's a big difference now. I mean, think about this. Between how we do things and maybe how they do it, you know. Motley Fool sells excitement and urgency. I don't, you know, in all their ads, that's what I see. Here at Financial Issues, we teach patience, discipline, and stewardship. You know, Motley Fool incentivizes constant action. They want you going on the next thing and doing the next thing. And, oh, you don't miss this, you're going to miss this. They use fear and greed to try and draw you in. At Financial Issues, we emphasize wisdom and restraint and context, you know. One approach feeds emotion. Our approach feeds understanding. That's why. So I think that's why I don't really care for them that much. It's not that they don't have some tools and they don't have some good stuff. I just don't like the way they bring in a relationship. And if you got to start a relationship, I mean, those salespeople who deceive you, the bait and switch salesmen. I'm not saying they do that, but they do kind of bait you and then sell you something. You know, it's almost like deception because they're not giving you the full truth on everything and they're sensationalizing it. That's what I have a concern about. But I'll tell you what, one of the things that I do like is the way you're using it. So effectively, to your credit, you're using the Motley Fool the right way as a secondary information filter. I have probably a half dozen sites I go out to for the same thing, for secondary and actually primary, secondary, and tertiary information. So that's a good way to use them. So it's not about them personally or anything like that. It's just the way they market. It feels dirty and slimy to me.
Mark, that's really well said. Here's a follow-up question for you. Based on what you said about secondary, tertiary information, what would be good sites for us to use? Seeking Alpha, Yahoo, Motley Fool, and you know, kind of understanding that most of them probably present similar information.
Yeah, they all have they all get their information. I mean, is it possible that any one of them could get an insight that one of the others didn't get somewhere? Possibly, but very, very minimal, because they're all just scanning over all the filings and everything, trying to figure it all out. And some people then have maybe a little better insight. For somebody who's not a professional, or you don't want to spend a lot of time going into balance sheets and income statements and and all the filings and stuff. Just stick to the typical, the Google, the Yahoo, all those free sites, because they have a lot of great information out there for you, and you don't have to worry about. And by the way, you'll get all the ads from all these sites too, telling you that they got that one stock that you don't know about. But at least you can get to the basic information.
And almost always that one stock is behind the paywall. You have to get behind the paywall to get it.
Always. And after 20 minutes of watching video that never gets to the point, and then you get, just for $19.95, you can get this name, and then you get it, and it's like, well, I knew about that.
It's in video.
So, Oh, and he brought up that thing about the sands. By the way, that's not a big deal. There's no global geological shortage on that silica. There is a bottleneck right now because of the ramp up of demand, but that happens in every business all the time, and that'll quickly come down once some of the permitting and the stuff gets out of the way. So not a big deal, but it's a short-term play.
Yeah, absolutely. Well, folks, it is Focus Friday, and we want to hear from you. Our phone lines are wide open. Light them up right now, 610-363-1110. If you have to leave us, folks, hope you have a wonderful weekend and great day of worship. For the rest of you, we've got the rest of the live show and then Financial Issues Overtime immediately after, only on the FISM app and financialissues.org/watch. So make sure you have that ready to join us once the live show ends. We'll be back right after this break. Giving is more than just writing a check. It's about using the resources God has blessed you with to make a lasting impact. Now, here at Financial Issues Stewardship Ministries, we're here to help you explore the power of giving beyond your income through non-cash gifts. From donor-advised funds, appreciated stocks, qualified charitable distributions, to name a few, these strategic giving options not only help ministries like ours, but can also offer significant tax benefits for you. Through prayer and thoughtful stewardship, you can give more effectively. You can impact lives, support ministries, and align your giving with God's plan for your finances. So, whether you're donating stocks, setting up a donor-advised fund, or even planning through your will, each gift plays a crucial role in advancing our mission to promote biblical stewardship. Ready to maximize your impact? Reach out to our team today.
Go to financialissues.org/non-cash gifts to learn more. That's financialissues.org/non-cash gifts.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
By SM.
Welcome back, folks. Good to be here with you all. I hope you're enjoying the show. And for those of you who are not partners, I hope you'll consider becoming one today, right now. Financialissues.org. Click that Become a Partner button. It's a great time to do it at the start of a new year. So consider doing that today. $132 a year. You really can't beat it. It is amazing. Mark, let's get to another question here. So Sherry is 68, and she's got a couple questions, two good ones, actually. We'll do the first one first. She says, hey, Mark, in 2022, we put our portfolio with a new inheritance and a new broker. Now I'm taking it back to manage it. So Sherry's actually 69. My apologies. So she's 69, retired last year. Today's value is approximately $600,000 non-qualified and $50,000 in an IRA. The broker has the portfolio 48% in fixed income, including two funds I cannot find on the broad or buy list. That's the Inspire and iShares fund. 10% of it is in TPHIX. There are no preferreds and no financials. Should I move some from the fixed? What do you think Sherry should do?
That's a little bit, throw those numbers at me again, because sure. I have to say that.
Yeah, so it's $600,000 in a non-qualified account, $50,000 in an IRA. She's got 48% in fixed income, and included that is two funds that we don't have on our list. And then 10% is in TPHIX.
Okay. And the question is?
And then the question is, should she move some from the fixed income? I'm wondering if she's wondering if maybe moving it into a little more bit of an aggressive mindset because she's in the fixed income.
Yeah, interesting. Yeah, I'm not exactly sure what her question is. Is she? It sounds like she thinks she's overweighted in fixed income.
I think so.
The TPHIX, that's a high income. That's a junk bond fund. Timothy playing junk bond. By the way, junk bond doesn't mean bad. It just means it's a little, it's a little bit lower rated than other corporates. So I think over 90% of that fund is in corporate bonds, which are paying higher interest rates because they have a little bit lower rating. It's been a pretty decent return on that too. For a lot of people, especially some of our partners who have been through multiple markets and stuff, the return on that fund actually, I guess if you average it out, would be around, I'm guessing, by the way, I'd have to go back and look at it, but I'm thinking 8 to 10%. Overall. So that's not bad in general, especially for somebody who's trying to keep a little bit of volatility out. So that fund, having that fund is good, but I would diversify into some more conservative stuff, such as maybe just the fixed income fund at age 68, so that you have, I don't think you have too much income at this point, is what I'm trying to say. It's just how you allocate it. Also, there's other areas you could move into that if you want some growth and the income, you could move into some high dividend stocks, or growth stocks that also are paying dividends would be a good idea. And it sounds like your portfolio is large enough. You could be buying some preferred, some REITs, some dividend-paying growth stocks, so you could diversify, get a little more growth, and but still keep the stability of having a larger percentage in the bond fund.
That's great stuff, Mark. Really good. All right, here's Sherry's second question. A little bit of a different one here, Mark. I'd love to hear your take on it. She says, my husband and three sisters received an enormous coin collection inheritance in March of 2023. This includes lots of rolls of dimes and silver. His sister is the executor and still has control of all of it. My husband would like his portion of that silver/gold in his own hands. The question is, can she, the sister, legally keep it from him? And then also, what's your opinion about buying/selling gold at this time? We do not have any commodity investments. How do you sell silver? So that first question, Mark, I think we start with that one. Can the sister, who is the executor of this will, legally keep it from the husband who has it portioned to him, I assume, based on the specifics of the will?
I hope this isn't going in the direction where I'm going to mention here, but I've seen way too many times families split apart over inheritance. And I really hope this isn't going in that direction. And I just like to give a few insights and possibly encouragements here. First, an executor carries a very heavy burden, as you know, Seth. Yeah. They have the responsibility of taking care of the deceased estate and are legally responsible for doing so to make sure it's settled properly. And that's a heavy burden, especially in a time when you're grieving the loss of a loved one. So please have compassion and patience with that person. And secondly, remember, the first thing that an executor has to do is settle all the debts and all the commitments that an estate has before they're supposed to disperse any assets. Because let's just make it real simple. Let's just say that there was a house in the estate, and the house had a mortgage on it that was more than the value of the house. That happens, okay? That happens, especially if somebody did a reverse mortgage and lived in it for a long time. It could be the money coming into the individual plus the interest could have grown to be more than the value of the house, and then they die. Well, either the bank's going to take it back, or you have to settle that if you want to keep the house. And if you wanted to keep the house, you'd have to have, or if you wanted the house, anyway, bottom line is you'd have to pay off the debt one way or another, and it might have to come from other resources. Even, let's get away from the reverse mortgage on that. They have to settle all the debts first. That is one of the directives of being an executor. So they have to do that first. And sometimes it means liquidating some bank account to pay off credit cards. Sometimes it means having to sell some assets to pay off debts and obligations there. So one step at a time, really. Be patient. I would really suggest come alongside the executor and say, how can we help? And instead of pushing, I'm not saying you are doing this, but I have seen it where they're pushing on somebody. So come alongside them, have a conversation, help them down the road. Can she keep it if there aren't anything, any executive duties that aren't fulfilled? No, she has to move it on. If it's in the will, if it was an inheritance, it's written in the will, if it's clear and concise, there's no way that they should be able to keep it. It should move on to that individual. But man, first steps are compassion. Second steps are patience. Third step, obviously go to your sister, then take the rest of the family and go to the sister, but don't go with pitchforks and stuff. Go with compassion and love and say, how can we help make this happen? And that's the way I'd really encourage you. Now, sometimes it just doesn't matter and it ends up in legal. I get it. Don't feel bad about that if it has to, but that's the very last place. I remember.
Well said, Mark.
I remember in the Bible it says something about, don't take your arguments before the court, settle them between one another. Into the public. So
especially when it's family, Mark, and especially if I don't want to assume, Sherry, but if you and your husband are both believers, which I assume you are, and if your sister is too, that's just all the more reason that the health of the relationship to me, Mark, seems of utmost importance, even more than getting your hands on what might be owed to you based on the will. So I would totally agree. If a conversation can happen, I think it should.
And they may have had that already, and it may have gotten to this point. Sure. But no, and there's clear directives of what it means to be an executor. So read them and then help her understand those as well.
Absolutely.
In love. Don't just speak the truth. Speak it in love.
Well said, brother. So Sherry's kind of second question related to this, Mark, is what's your opinion about buying/selling gold at this time? So she's specifically asking about gold here.
Yeah, obviously there's been a huge run up in gold and silver, so it wouldn't hurt you to sell it off. And these are numismatics, so they have some inherent value that just bullion doesn't. So that might be good. One of the things I found over the years is there's a lot of mail order or internet places you could sell it. I didn't really care for those. I like a relationship. I found a relationship in my town with somebody that actually did some fair deals with some of my clients. And because of that, I would refer other clients to it. So you might want to ask around to find out who buys and sells gold and silver here near me that you can trust. Now, it might be a long search, and then go in and get a relationship with that person before you try to sell. See, check their pricing with the stuff online and with the spot costs, things like that. I don't know in Atlanta who or what would be there. Do you have any ideas, Seth?
Well, Mark, the only thing I can think of, and this is something that historically our ministry would promote, or at least encourage people if they're going to buy or sell metals online, would be AppMex. Have you ever heard of that, Mark? AppMex.
I haven't ever used them. No.
Okay, so that would be one. But I once again, I would even want to look into them now and see, because that was a historical position. I don't know if they've changed now. I just know, oftentimes we would tend to give the caution of just be very careful that if you're going to use a metals dealer, make sure that it's one that's trustworthy. Yeah,
exactly. Yeah. And check their pricing. Yeah. And I never let anybody take jewelry, gold, silver, precious diamonds, or anything in the back room to take a look at it. Always keep it on the counter.
That's a great common sense there, Mark. Really good. Boy, folks, we'd love to hear from you. 610-363-1110. In 15 minutes, overtime begins. But before that happens, we got a whole segment. So don't wait. If you can't make it to overtime, you're going to want to get into the phones right now. Give us a call, 610-363-1110. A lot of questions to get to, so we'll do it on the other side of this break. Great to have you all with us on Financial Issues. We'll be right back.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. When an abortion-minded mother hears that sound, 80% of the time, they choose life. For $28, you can sponsor a life-saving ultrasound and share the hope of the gospel with a mother facing an unplanned pregnancy. Hi, I'm Mark Manella, host of Financial Issues, and today I want to encourage you to give to the amazing work of Preborn. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each perspective carefully before investing. Investing involves risk, including the potential loss of principal.
There are moments.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, now's the time to give us a call. You can call in at 610-363-1110. Again, 610-363-1110. We've got one more segment of the live show, and then it's Financial Issues Overtime. You can only join exclusively on financialissues.org/watch or the FISM app. So make sure that you have those handy. If you're already watching the show on those, that's great. You don't need to go anywhere because we're going to start right there with those. But if you're listening on the radio or watching on a TV outlet or something, just make sure that you have access to the app or to our website, financialissues.org/live. Okay, interesting stuff here, guys. It looks like the battle for Y'all Street is heating up. Y'all Street. What can you tell us about
Y'all
this?
coming down.
That's right.
I know. I need my big hat, right?
This town ain't big enough for 2 stock exchanges.
Yeah, I know. I feel inept to talk about this because the most southern thing about me is that I like Duke's mayonnaise, but that's about it. But President Trump, he took a swipe at Zoran Mamdani talking about the New York Stock Exchange expansion down to Dallas. He said it's unbelievably bad for New York and called it a big test for the new mayor. Now, what's interesting interesting is this actually happened last year. The New York Stock Exchange relocated what was actually its Chicago-based electronic exchange down to Dallas. And I think already more than 100 companies have dual listings on NYSE Texas in just under a year. So that's pretty impressive. But that's not all for Dallas. It's called Y'all Street for a reason, because there's also the newly launching Texas Stock Exchange, which is different. And there's NASDAQ's Dallas operations on top of all of that. So Dallas is quite the place. Meanwhile, Dallas Mayor Eric Johnson said the shift of financial firms down to Texas is, quote, inevitable. Now that a socialist like Mamdani leads New York, he's predicting an avalanche of Wall Street firms moving down to Dallas. So to kick off this conversation, Mark, I want to know, what is going on with Dallas? Why is it the hot spot right now?
Same reason Texas is the hot spot for a lot of businesses.
Not just the temperature,
Florida. Right. Not just the temperature. It's an incredible place to do business. And that's what's really good. It's a competitive, it's strategic. There's a lot of talent moving down there. The tax structure is great. They're business friendly. All these things are happening, which are just the opposite of Chicago and New York. This is a wake-up call for New York. I really believe that. New York's political and regulatory climate is just pushing businesses away, and their tax environment's doing the same thing. I see it. Obviously, this wasn't something that happened overnight, or like you said with Mamdani, but it is something that has been happening for years. I was thinking about moving to Florida one time, but it's just like every time I check on a house I looked at, it had gone up in price substantially because everybody's moving to Florida and Texas because of the tax structure, the business friendliness, where all the talent is moving, including the financial talent.
You're not alone, Mark. The whole ministry here was thinking about moving to Florida for a while.
There you go. Yeah. So I think this speaks more about the failures of New York and Chicago than it does anything else. And what they're doing to those cities by their anti-business, anti-everything, governmental, the people who are running it. Yeah. So that's the bottom line on it for me is I just think Dallas has been and continues to be a great place to do business, although traffic is terrible.
Interesting.
Yeah, well, my question is, how is this going to impact the New York? Like, how is this a threat to New York, I guess, if this is a digital thing?
Well, it's not just digital. You know, that's like saying having a server farm is just digital. No, it takes hundreds, if not thousands of people to maintain those farms, to replace the rack units, to be running the cabling as necessary, to be programming things. High-tech talent needs to be moving to Dallas to do these things. So they're taking people out of New York. They're taking well-paid, intelligent people out of New York to go down there. It's not just moving a digital exchange down there. It's not like putting a computer in a closet, or as Hillary would do in a bathroom somewhere. It's actually bringing all the talent down there too. Bringing a lot of talent down there as well.
Yeah, that makes sense.
Does make sense. Yeah. Yep. That's good.
So it's an exodus.
Mark, that was
a situation.
So I had kind of a related question with this too. You know, the New York Stock Exchange expansion, is it a direct challenge to the Texas Stock Exchange? Like, are people in the New York Stock Exchange a little nervous that there's a whole separate stock exchange here and they want to claim some territory?
Well, I think anytime there's competition, there should be some concern, but no, there's room. Yeah. There's room for it. You know, I don't think the New York Stock Exchange is like the Empire State Building. Even if all these others eclipsed it in listings and all the different stuff that goes on, it would still be the New York Stock Exchange.
It's iconic.
Would still be, it would still be that. We'd still be, I'd still be doing research, and I'd want to compare something to all the stocks on the New York Stock Exchange. You know, that's the kind of things that, like the Dow Jones, you know?
Yeah. Absolutely. Good stuff, Mark. Hey, 610-363-1110, folks. The lines are open, and they're going to stay open. We're not closing them at the top of this hour because we're going right into overtime afterwards. So you can call in right now, folks, and join us. 610-363-1110. Let's go to Don, Mark. He's calling from your home state of Missouri.
Hey, Don, welcome to Financial Issues.
Hey, good morning, everyone.
Yeah,
Hey,
are
Don.
you all hunkered down, ready for the 43 inches of snow we're going to get? Anyway, sorry. No, don't go there. Don't go there. What's on your mind this morning, Don?
Well, I think it's 12 inches of snow here, but that's enough. So, yeah, thanks for your time. I usually hide behind email when I send in my messages or comments. I've been a partner for about 9 years. But for this one, I wanted to call in and just say thanks to your team for something that is a huge value to me as a partner, and I'm sure it is to everyone else, too, that's a partner and uses a portfolio tracker. So that's why I'm calling. I was updating my portfolio tracker, and I'd heard maybe as I mentioned on a prior call, that certain fields were automatically populated now when you enter a new holding into the tracker. So before you'd enter the stock symbol, number of shares, and it'd give you the market value and the current price. Now it gives you the sector, the industry, the style, the market cap, and that is just a really huge thing because, I went through and I was like, okay, well, there's all these that are already in there, so I was kind of playing with it, and, you can re-enter it and then delete the old one, and that's kind of how I was updating the old things. But it's just such a huge time saver, especially if you're trying to allocate and you're picking stocks within a sector and you want to differentiate within those stocks. This makes it so much easier to do. So thank you for what your team's done there.
Well, Don, that's really important. And I want to thank you because your feedback's very important to us. One of the things originally last year, we've been having meetings since the day I came on about how can we make the Partners Hub more efficient, easier to use, and actually of greater value. And probably once, twice a month, we're getting together and making lists of things that can be done. And oftentimes I hear, well, we got to get with the programmers, got to do this, and it sounds like it's going to take forever to get stuff done. But then I turn around and here's Don calling in and saying that's done and this is working and this, it's like, praise God. We need your feedback like that. And thank you for doing that and calling us and letting us know that it really is saving you time and making it easier for you to make choices that help you manage God's money. God bless you, sir.
Yeah, thanks. And if anybody's on the fence about being a partner, the portfolio tracker in itself is worth more than $132 a year. So people should sign up.
Don, that's awesome.
Praise God. Yeah, absolutely. Yeah, I agree with you. I think for $132 a month, what people get, they just don't know what they get.
Sorry,
there's
Mark,
so
I'll just
much
correct you.
behind there.
$132 a year.
A year,
it comes
yeah,
out to 11 a month.
I'm still in that mode. I remember when I first started here. We were talking about the partnerships, and they asked me what I thought about $132 for a partnership, and I said, well, that's kind of cheap for a monthly fee for good financial advice and all the tools that you're offering. And they said, no, Mark, that's a year. It's like, oh my gosh, and it's like, I love that because that means that somebody with a $5,000 portfolio can afford it. That means that you don't have to have $5 million to get into this. It means that anybody who loves the Lord and wants to understand how to invest with biblical integrity and do so for the purpose of investing, with the purpose of growing those assets, but doing it in a way that honors God, can do that. And that's what's so exciting about this, is that it's not like Financial Issues is overpricing this or trying to make the most money. That's not what it's about. It's about reaching people for Christ, reaching people, helping them grow closer to Christ through their investments, helping them to understand investment stewardship so they can honor God with all they do, including their investments.
Mark, that's great. Folks, if your interest is piqued, you want to learn more about that portfolio tracker, the partnership in general, financialissues.org, and just click that Become a Partner button in the top right corner there.
Hey, you hear that music, Seth?
Does this mean it's time for overtime?
It's time for overtime. And not only that, but we're having a celebration, the 1 week anniversary of overtime. I hope you'll join us. Stay tuned. We're not going to be gone long, just seconds, and we'll be into overtime. And together we'll continue our journey to investing with biblical integrity, because I know you love the Lord. That's why you're here. We love the Lord, and we all want to honor God with the way we invest, because it's His money, it's His investments, and it's to His glory. We'll see you in just a minute.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.